Good morning and welcome to another edition of the OFX Currency Corner as we digest the movements of the Australian dollar at the end of last week and see what impact we expect for this week ahead. The Australian dollar really struggled to break outside of ranges between 76.50 and 77.20 at the end of last week as we remain a victim to the ongoing protectionist trade policy battle between the US and China. Things escalated on Friday when President Trump asked the US Treasury Department of Revenue to increase tariffs on Chinese imports to $100 billion, and that raised questions as to whether we will see a retaliation from China beyond what's already been announced as a response to the tariffs on steel and aluminium. We're looking to President Xi Jinping today as he makes a speech at 11:30 p.m. at local time here in Australia, AM local time in Australia, and whether we see a conciliatory tone adopted, it may go a long way to easing the tensions and hopefully help boost the Australian dollar through that resistance at 77.20 on risk appetite improvements. In terms of macroeconomic data sets, we look to the NAB's business confidence report today, and after such a strong read earlier this year, a moderation in February may see us rally through this level and hopefully again act as another catalyst to push us back above that 77-cent handle. We also look to US CPI data tomorrow, and while it's not the Fed's preferred measure of inflation, it will give a good indication of whether we will see a June rate hike and then a second hike or a third hike for the year into November or December. We still expect the Australian dollar to remain range-bound throughout this week as it remains a victim of this trade protectionist talk, and any appetite and risk will remain the key driver for the currency through the week ahead. Thanks so much.